Hey everybody. Hey everyone, welcome back to another week of the Trading Triangle. Hey Kay, how you doing this week?
I'm doing great. Nate, how are you? Sean?
I'm doing well, yeah. And Sean, how about yourself?
Doing very well. Thank you.
There we go.
Feedback.
Hey, we'll get Sean's audio squared away here. But welcome again to the Trading Triangle. We're excited to be back for another week of looking at charts and getting things ready for trading in the upcoming week. Had a crazy week last week with NVDA earnings, and we talked about it last week. We're going to talk about it a little bit more this week. Markets are doing all kinds of fun things, pulling back a little bit at key levels. So we'll take a look at all of it. Quick disclaimer up front. Remember, we are not financial advisors or financial professionals. None of this information is financial advice. Really just three friends getting together, look at charts, get ready for trading in the coming week, doing something that we love to do. And this is all for educational and entertainment purposes only. So thanks again for joining us this week. We'll get right to it. And also, please remember to subscribe and hit the like button. Helps us get the word out and get other folks enjoying the charts with us every week as well. So Sean, your audio working good? You good there?
Yeah, sorry, I had it open on the other screen, so I heard you twice. I thought, I just panicked for a second.
That's too much.
That's too much. That's too much. Too much.
Yeah, way too much for me.
Well, let's get looking at the charts here a little bit. I know that last week we had some names moving up, some names moving down. Notably for me, look at NVIDIA. Was it up 8% on the week? Lots of movement all over the place, but ended up nicely on the plus side. Tesla was up. Is this right? Are these the right numbers?
These are. You have performance for the week percentage. So 11.43% for Tesla. You know what I really was hoping, which we got it for a brief moment. I thought that NVIDIA's blowout earnings will spur a rally.
Right.
But because Friday was also Jackson Hole, it kind of faded away. And I really thought that AMD would get an advantage because of NVIDIA's gain, but we didn't see that. Now, next week, we have a couple earnings that we'll talk about in the next slide. But yeah, it was like still, I would take this week over the previous week where we all had reds in every sector.
Yeah, I totally agree. And I saw Tesla's up 11%. That's looking good. We're going to talk about that today, right, Sean? Getting into Tesla charts.
Yeah, absolutely. Yeah.
So, yeah, a lot of good big moves and some names last week. Outsized moves that pulled back. And, so really interesting spot. But I think a little bit for the Bears and the Bulls as we were right in neutral territory on the Fear and Greed Index, right? Dead center here at 48. The VIX I thought was interesting. So, VIX dropped 8% last week.
Yep.
Over at 8.46%. Yeah, so at 1568 to close, which is interesting. I mean, S&P was up 0.82%, but the Dow was down about 0.5%. NASDAQ rallied 2%, over 2%. And then the Russell was down slightly, basically flat. Bitcoin was down 1% over the last 5 days. And so all of that, kind of choppiness, I guess you could say, is dropping the VIX. And so I thought that was notable. 1850 is about what it got to. Is that about right, Kay?
Yep.
Yeah. So I don't know, anything to take away from this chart this week. Dead central and neutral.
You can see that already. We dropped to fear at 43, the last close, and then when we reviewed it last week, it was at 45. So it's a positive, right? And that's the reason why you see the market is green across all industries, not just one or two in particular. With green, more buying coming in, a little bit, people are getting out and about. We can also touch upon a little bit of what Jerome Powell, said. I don't know if you guys noticed, but a couple of things I took out from that was that he is long-term, he is still maintaining the 2%, bringing down the inflation at 2%. That's the first point. The second point I came out, which I understood, was he's not enjoying the fact that the unemployment rate is not going up,
right?
And things are not breaking in the economy, right? Because otherwise, and things are not breaking in the economy, and that is where the concern comes. The problem I'm seeing is the market is pricing 4 rate cuts for next year, and you can go on CNBC, you can hear all the gurus talking about it. So if you're planning to have 4 rate cuts, if that is your plan to have 4 rate cuts, I don't see how Jerome Powell is going to, have 4 rate cuts when he is still not happy with the current trend and where he's going with. That's what I got out of it. So I don't know how that's going to play out in the long term.
He didn't throw a total bucket of ice water on things, so I thought that was good. But yeah, I don't know. I think that you're right. The Jackson Hole kind of muted things this week, kept everybody kind of timid despite big NVIDIA earnings. Any thoughts to add there, Sean?
He just kind of said what I kind of expected, really. So it's kind of a bit of a nothing burger.
Good old nothing burger.
In my opinion.
I love the nothing burgers. Well, let's see if we got more nothing burgers in the earnings this week. Nope. I see big names. I see Neo. We going to talk about Neo earnings this week?
I think we are, yes. Yeah, I'm definitely going to bring that chart up.
Nice. That's Tuesday morning. What else are you looking at this week, Kay?
I'm looking at Salesforce. Salesforce, Okta, more on the SaaS side. I will look at Broadcom. Now, I know Broadcom in general has, I don't know what the share price is, but it's pretty high. I think in the $500-$600 range. Broadcom. Lululemon is another one. Compared to if you invest in Nike, generally Lululemon you should be following as well, because it has become a major athletic wear, just like Nike. But yeah, those are a couple names. CrowdStrike is another one.
CrowdStrike Wednesday with Salesforce and Okta. Interesting name.
Yeah. So Salesforce is one of the big names like Adobe in the SaaS space that you want to follow, just to get the industry if you don't want to invest in Salesforce.
We had Arista Networks, ANET, right, report on was it last week before, and so I think CrowdStrike coming in. Oh, am I mixing up names? Actually, is Palo Alto. That's what I'm trying to think of.
Palo Alto, I think,
came in, right, and reported and did really well. And so CrowdStrike sliding in behind them will be very interesting, I think, on Wednesday. Wonder what the market's going to trade heading into those earnings. Might be anticipating, some positive news on the back end of the Palo Alto. So something I'll be watching.
Sean, are you following Sean, are you following Polestar?
No, it's not what I follow actually. Keep meaning to kind of check up on it, but I don't really see them around or hear about them. So something just does escape my mind really. So no.
Okay.
I did see a post, and this is just somebody's anecdotal, conversation, but they were talking about they went to Lucid, they went to Polestar and Tesla, and took the family and test drove all the vehicles, or maybe just sat in them. But I think they're just sitting in them, obviously, right? So, anyways, the family members all voted on each of the cars, and all of them said that the Lucids were just not comfortable. Like they just didn't.
Really?
They're too tight and jammed in there, which I thought was interesting. I've never been in one. And then Polestar was similar. So like nobody liked in this one family, right? Very anecdotal, liked either of those. But the Model X, thumbs up all the way around, loved it, all the features and space and all that. So anyways.
But if you think about it, right? So if they're comparing Model X, and I can understand Lucid because Lucid is also a very expensive car, but Polestar 3 or whatever the Polestar which is out, it is, I sat in Polestar, I've sat in Tesla, I haven't sat in Lucid yet, but so the ceiling of Polestar, the sedan, is pretty short. So if you are a tall guy like Nate, you're probably your head is gonna be pretty, cramped. And if you're taller, like 6'4", 6'5", then I think that's not the car you should be in.
Yeah, no, there's definitely a big difference between the 3 and the Ys compared to the X and the S with Teslas, right?
Yes.
If you've driven those, it's like big step up in luxury when you go to S or the X. But okay, I can get derailed real quickly talking about Tesla. We were talking about earnings. Keeping it rolling and getting to the charts. Sean, I'll hand it over to you. Let's talk about SPY here.
So SPY this week, I think it's in a bit of a tricky spot, I must admit, because I want to keep it nice and simple. You've got the 444 line, which you've been talking about for a couple of months now, just above us. Right. But you've also got the 50 and the 20 moving average kind of combining it all together. So that is going to be tough to get through. That's all I'm going to say.
That simple, no doubt. What about you, Kay? Yeah. What are your thoughts on SPY this week?
How do I say this? The options data, right? I generally look at options. Option data is pretty flat. It's similar to what we had last week. It's slightly more bearish for 9-8, which is not next week, actually. It's the week after. Actually, let me look at this data. Yeah, so next week is 9-1, which is ending, right?
Yeah.
Yeah, it's a little bit, it is a little bearish, 2.98 compared to last week, which was 1.39 put to call. If just between those 2 weeks. Yeah.
All right.
Is there so there are 3 things that are happening next week. You have the jobs report coming out. You have the what was that? The I think PCE data is coming out, and then there's also unemployment numbers coming out.
Yeah, that's a good amount of data. I will say I love Sean's analysis this week, so I'm going to back that right up because my biggest note on the chart is the big rejection at the 50/20-day moving average, with the 20-day looking to cross below the 50. Right on that huge rejection on Thursday, right at 444. That's all not fun. However, go take a look at RSI. I don't think we have it on this chart here, but the RSI I like to look at for a sharp hinge upwards, and we've got that this week. And if you just go back and look in history, it doesn't necessarily mean we're going to have a huge run up. Then obviously it doesn't mean anything's guaranteed, but every time you get a big hinge like that, where it's just a quick, sharp reversal V formation on the RSI, you tend to get a little bit of follow through. So maybe that helps us, hang out around this 444 level. But yeah, tough with that moving average being below the 50-day. So.
Yeah, and I think if we show some strength and get through that 444 level nice and smooth, nice and firm, big volume. So we had a big volume on Friday, as you can see there, probably Jackson Hole related. If you can push through that and hold that, then that's really quite bullish, I think, moving forward.
All right, let's look at the Qs.
Yep, so the Qs, similar sort of things. We've got the 20 moving average and the 50 moving average kind of crossing as we speak. But we do have a nice little support level of 357, which I've had there for quite some time. Lots of people have different levels, and I was quite pleased with how it reacted to that. It bounced off it, not perfectly, as you can see there, but it kind of held throughout that day in particular. But we also have a kind of trend line that's coming down, which I'm a bit concerned about, to be honest with you. But if we can kind of, I don't know really what to say, but I'm just leaving it. I'm seeing how the market matures. I'm not obviously trading Qs at the moment because it's a bit of no man's land. It could easily break 357, and it could also go up and move towards that 372 level. So just sit on my hands, kind of wait and see what happens with the Qs at the moment.
Yeah, I tell you, it's not my favorite pattern because it often doesn't quite work out. But the head and shoulders here, right at your 357 level, I mean, that's the neckline. If shares keep pulling back there, that could be that classic pattern where if we break through it, you can see some steep selling. That being said, I feel like the last 3 or 4 times I've seen a head and shoulders pattern, things took off. So, it's hard to say there. Kay, any additional thoughts on the Qs?
So different from SPY, the last week put to call was 2.2. This week it's 2.27. So it's pretty flat. So there isn't any sentiment in the options market for Q. I think that also has to do with there are a lot of tech companies reporting earnings next week. The ones that we just showed. So that could be a reason, right? That could be a reason. Also, I think Jackson Hole wasn't as bad. And, if the interest rates are, aligned, we pretty much are seeing bounce back. I mean, and you can see that Tesla having a 11% jump for the week, along with Apple and Amazon, everybody. Apple is in a precarious position, and we're not covering it this week. We'll probably cover next week or so. But, I'm seeing that QQQ was hit much harder than SPY. So I think that's the reason there's a lot more sell-off in QQQ stocks, at least the tech stocks.
The 20's already crossed below the 50-day moving average for the Qs. I've got downside targets below the 357, which I added last week. Thank you, Sean. And I've got now 348 and 333 with that gap. There's a gap down there by 333. So if we do get some selling, that's where I would target to drop down to, which is going to be about the 150-day moving average, 200-day moving average, probably pretty close as well. So, yeah.
Like you say, if you've got in that move, typically the Qs, when it drops, it does drop quite harsh, 1.5%, or sometimes 2% in one day. So if you get a good early move, you can already set your stop loss in a fairly safe position. And then obviously the rest is history from then onwards.
Yeah, let's see what history can be made here in the coming weeks. All right, keep it rolling.
Yep. Let's go. So we spoke about Tesla, and obviously you did say it was up this week quite handsomely, and it bounced nicely off of the 214 level, which I've kind of trailed it back a bit towards kind of February, March of this year. But generally, this chart's looking quite nice, I think. We're above the trend line. We're above the 200 moving average. The only concerns I have are the 2 moving averages above us, and the fact it has crossed already. But with the price action that's happened this week, it gives me reason to believe there might be a bit of strength in the stock, and I would like to see the volume increase as a result of that. But if we can push through this 241 level, which I've drawn, and then make a nice move towards this, what's that, 290 at the top there, and that is my gap fill opportunity. I realised I didn't take any breaths through that whole speech. So I've got to breathe now.
Save you?
Yeah, so that's basically what I see on this chart. We can see a nice little bounce off the 200 and the trend line at the same time, and the support level. So that would have been great if you got in there. Congratulations to anyone who did.
Yeah, nicely done there if you did. This looks... Oh, sorry. Go ahead, Kay. Jump in.
No. Go for it. I'll ask a question later.
I was going to say, this looks very similar to the DraftKings chart I've got. And so you can draw a trend line here, Sean, that was just broken last week by Tesla, right? That downtrend, and really busted through on, what was that? I guess that was Monday, really. So, yeah, I like the setup there to try to move higher. But those darn moving averages right above there could be tricky and right at that resistance level. But I like momentum here and looking for some follow through next week. That's what I'm hoping for. What were you going to ask?
Are you guys in the trade right now with Tesla?
No,
Any
I'm
active
not.
trades?
No.
Okay. Because I am in active trade right now. So nice. my cost basis is about 255. And last week when we had this big jump in Tesla, I sold a covered call at 265 for a monthly covered call at 265, and it was a decent amount of premium. I think it was 225 or something like that.
Nice. Very nice.
Yeah. Generally, a couple of weeks ago, Tesla was giving almost $400 premium, for a monthly. So you're looking at about $100 a week. So it has definitely dropped a lot. But honestly, I do think if we can get some more momentum on Tesla, I will be able to get rid of those stocks that I have.
Yeah, I like we had this conversation, I think, last week, and I can't remember if we were live or this was behind the scenes, but I really like the idea of, like you said, your cost basis, you got 255, you're above, or you're underwater right now, right? You're above the current share price. And so oftentimes if you're selling covered calls, the thought is, well, I don't want to take a loss, so I can't sell covered calls a week or two out because the premiums are only worthwhile below my actual cost basis. I get the 245 strike. And so that wouldn't be, you don't want to take a loss on the shares if they were called away. So moving out the expiration date to allow you to move up and still collect premium outside of, strike price outside of your cost basis. I think that's the big lesson. And if anybody takes anything away from what Kay's talking about here, I really like that, Kay. So just something I wanted to point out again and highlight.
Yeah, I think we did talk offline about this one, but that was, I think, I think it was offline.
Bring it to the audience, or bring it
to the audience. Yeah, so I think that worked out. My initial plan was 2 months out because that's how the market was. Because Tesla was at this 200, I think that little doji candle that you have on Friday, the week prior when we had a Sunday live, right? We were at that level. So Tesla 2 month out was giving the same premium. When we had that massive run up on Monday, Tuesday, that's when the premiums got juicy. And I'm like, you know what? Instead of selling 2 months out, we can sell the same, a $10 up, 265 for the same price, same premium price. And I'm okay with letting go of my shares. It's okay if Tesla runs up to 290. I'm okay with that. I don't really care because I got my profit out of this trade. And that's the mindset you got to have. That you are okay with the run-up if that happens.
I like it. Sean, can I add one more thing in this chart?
Go ahead.
The 3 candles that bounced off of support there, going back to Monday. So you have this gap down to a doji candle, and then a gap up, and then that gap up close at least halfway, in this case, well above, 2 days prior before the gap down. that's a typical setup if it's on support like that for a big bounce and move higher. And I forget the name of the actual pattern, but it's identified and called out as a trading pattern to look for. So I actually think that we might be moving up to that 50-day moving average here this week, and that'll be real where the true test really comes in. So what is that, like 257, 258, somewhere around there?
Yeah. No, I like that. I'm going to note that one down, that's for sure, because that's not a pattern I've typically come across.
Yeah, I don't think you have to see it right on support, and so I don't think you see it too often. But yeah, something to look at.
Awesome. Nice. Yeah, should we move on to NEO?
Let's do it.
Let's do it. So we have earnings on Tuesday morning, and it's going to be a tough one because they basically hinted in the last earnings report that this one won't be so good, and that's why they did it so late. The numbers are already there. The deliveries, etc., obviously converted into revenue. It's not going to be quite wonderful, but I think the stocks reacted in such a way that that's already priced in, if I'm be so bold to say. And we have that in the two orange lines we've got here. I mentioned them last week. So the first one is obviously the earnings report, and the second one is the deliveries happening on Friday. And we're expecting another 20,000 delivery month, which would be exceptional. If we can get a little bit higher than that, that'd be amazing. But I think 20,000 is the mark that we want to hit, and that's what William Lee, the CEO, has hinted at as well in the last earnings call. So it'd be good to see his thoughts in this earnings call. If he reiterates that, if he improves that, that'd be fantastic for the stock. But on a technical level, we're not looking great. And I'm going to be completely honest with you, we're not looking great. We'll keep testing 1055. I'm amazed with the current price action within the stock market as well, with the kind of volatility, that it's actually stayed fairly, like the average true range basically hasn't moved in the last 5 to 6 days, tight. which is quite nice, but it's also quite worrying because obviously it means it might be building up to a big move, and we can see the volume decreasing, and we can see the catalyst that are just around the corner. So if it was to get a big move, it could be up, it could be down. But I don't know if you have any thoughts on this, guys. But with this kind of price action, would you say it's building up to a kind of a big move?
Okay, you want to take this one first?
I don't know, honestly. I'm very divided with NEO. It's going to be a tough one, and I'll tell you why I think so. It's because the data that is coming out of China is actually dampening not just NEO, but in general the whole market, how investors are perceiving China, and I think that will play some role with NEO. Now, I don't personally follow NEO as closely as you follow, so I'm not sure about the delivery numbers and everything. But from a technical perspective, honestly, I don't know. I'm staying out of this one. The options data, of course, is always on the positive. Like you have 0.43 put to call ratio, and for next week you have put to call as 0.51. So it's as bullish as you can think of. There are a lot more call options versus put options, and the implied volatility is 39%. So a lot more people are probably buying calls at this point in time, and you probably are paying a lot. So if you're a seller of option, you must be enjoying getting those premiums. If you're a buyer of those options, then you basically are paying a lot of premium. So that's my take on NEO.
So looking at the chart, I don't disagree with anything that's been said. I will say, looking back in, going all the way back to July of 2020, that's when things really took off. Actually, I guess probably June. Yeah, June really. But then in July, there's this big gap up. Shares went from right where they're at now, basically around 1055, all the way up to almost 17. Then came all the way back to test the 1055 level before taking off and going, to the moon, and like everything else did through 2021. It got all the way up to 66 or so, right? But point being, it came back and tested this 1055-ish level before that massive launch. And since then, it's come back and gotten below, but it tested, I feel like it tested the level a couple of times before finally breaking. So maybe this is a really key level, and that's why you're getting so much consolidation and support there. Volumes dropped off on the selling. And RSI is starting to curl up a little bit. So I don't know. I think maybe I'm a little bit more positive, a little more optimistic, but it is a tough spot.
It is depending on the earnings results and the kind of not really the results, more for the guidance. In terms of like the margins, etc., for the company. And if we get even a slight hint of good news on that, I think it will move quite nicely. I will be playing the earnings because that's just who I am. I'll pay a very, very small amount. It's not financial advice, but I just like to on my favorite stocks. I know, Kay, you like to play earnings from time to time. But if it goes down 10, 15, 20%, then that is what it is. It's the stock market. That's how you go, isn't it? But
I've kept my position small.
Personally.
Yeah, for the same reason I kept my position in NEO small, Sean. So I never did add more, but I didn't sell either because I like kind of seeing the support here. But we'll see.
So would you be, let's say if you're playing the earnings, would you be what percentage would be your stop loss? Like a 20% down stop loss? 10%?
Honestly, it's an overnight thing for me. So, it'd be through the day, obviously, because it's an open market. So when the market opens, it would be, if it was 20% down, I would just sell it there and then. Not necessarily. I'd look into the report, but if it looks quite bad, generally, then I would probably sell it there and then. Likewise, on the other side, if it went up 20%, I would just hold it. Because if you've got good news, it's more likely going to move up for the next month or so. Generally, one thing I will add to all of this is if Tesla does make that move kind of up, it might bring NEO up as well. And there could be kind of 2 or 3 things kind of going well for NEO, which is obviously the 2 catalysts we've got here, and Tesla moving up. I think that could be really nice. If it was to all happen, of course, you need 3 ticks out of 3, but we're living in a dream world, aren't we? Let's be honest. You never know, though. You never know.
I like it. Yeah. Let's see this 1055 hold up. That's what I'm voting for.
That's the level. That's the level we all want to see hold. But yeah, that's it for me. That's it for my NEO charts, and we'll hand it over to Nate.
Thanks, Sean. That was good stuff. I will certainly hope NEO holds up there and we get some good guidance. See John out there in the crowd. Howdy, John. Thanks for joining the stream this week. Let us know if you have any requests you can maybe touch on, or if we can't get to it this week, we'll look at it next week. But appreciate you joining. And let's look at the next chart here. So I brought NVIDIA back. NVDA, of course, everybody knows the ticker. And I brought it back because of all the talk last week. I thought we did a good job talking about 420 holding up nicely. It only, dropped below that level for, less than 40 minutes last Friday and held up. Then we got the big push through earnings and the sell-off, right? So earnings did not hold, got all the way up above 500. And then just sold off and closed back at 460. The things I like here, though, is we held the 20-day moving average with a nice lower wick after we got near testing it there. The 50 days right there as well. So additional support. And so 460 holding up. I've got 420 would be, stop loss level, basically, because it has held so nice. I wouldn't want to dip below that level. And I'm targeting getting back above 480. And I just included here the IV crush note at the bottom because we talked about that as well for options traders. So, you got these huge IV levels pushed into the top of the range heading into earnings, almost guaranteed that you're going to get. It's one of the closest guarantees you're going to get in trading, I would say. Okay, back me up on this one. But you're going to get an IV crush right after earnings. And
100%.
Right? And so that it's just because you get more information. And so all that volatility now, gets let out, I guess you could say. So last note,
we talked about this so we talked about the implied volatility at this point in time, right? So in the last one. So if your implied volatility is generally high, which means there's a lot of information, floating around. Once that information pretty much settles down, your implied volatility also comes down. So if you're an option buyer, and your implied volatility is high, you're paying a lot more premium. If you're an option seller, you're probably enjoying those, and vice versa. So if implied volatility is too low, there is really not any action going on. So the options prices premiums would not give you any bang for the buck.
Right, exactly right. So the other thing I'd add to this chart here is the SMH weekly candles I threw in the top left again because it's holding support and it's holding above the 20-week moving average. And we do have a long upper wick on that candle, making kind of like a reverse hammer. So that's not great because of all the selling that happened to pull that back down after the big anticipated move into earnings. But that's also kind of what I expected. So I like that it's holding and moving higher here, despite all of the selling to close out the week. So we'll see where it goes, but I'm actually overall positive on the semiconductor sector, where I think a lot of folks might be skittish right now.
I have a question for you, Nate, here.
Yeah.
Are you thinking of getting in long-term on NVIDIA? And if yes, let's say if you're starting a new position, right? Where would you open a new position in NVIDIA if it's a new?
Yeah, that's a great question. So ideally, if it pulled back and held 420 again and bounced a little bit, I think that's a great spot to get in. We do have the gap from prior earnings back there all the way back to 318.
Yeah,
I'm not as concerned about that. But if you're buying for long term, you can't get shook out, but by a drop along those levels. If you're buying in here, you're really just looking for 5 to 10 year horizon potentially. I mean, after these big moves, they've beat on earnings, guided higher 2 quarters in a row. What more do you want? I kind of like buying it here, even at 460, to be honest.
Got it.
So I would get in partial positions, I guess, and DCA in because of the big move that's come up, and look for opportunities to buy on dips moving forward. Mm-hmm. But I think you got to get this in your portfolio, right? And so I think getting in here is not bad, but I wouldn't go full bore. I wouldn't just dump all of my cash in. I would definitely leg in maybe 10% at a time, something like that.
Got it.
Another thing that I haven't mentioned, but I've been doing a lot of research on is stock replacement strategies using options. And I guess the key there is really to try to get a net positive 90 delta if you want to be playing the long side. And you get, delta meaning roughly how much the underlying option position is going to move relative to the stock. So if the stock moves $1, you're going to move about 90 cents, right? Mm-hmm. And so you can sell multiple call options at, like, for example, a 70 delta, and then, buy multiple call options at a 70 delta, and then sell a 50 delta. And then, that gets you to about a 90 net delta options position. And effectively, it'll act just like the stock does. And for something like NVIDIA, where to get 100 shares is $460 times 100, you're talking good coin. You can get into a position like this for a few $1,000s instead of tens of thousands of dollars, and it will mimic the stock price.
So you're talking about poor man's covered call, right?
Well, that is, but it's
a little different,
more on the delta. So actually, you end up usually buying multiple calls and selling just a single, like a 2-to-1 kind of ratio.
Oh, I see what you're talking about. Yes.
Yeah.
I don't know the strategy name, but I have seen people do that, and I have seen it. It's a little bit too complex for me, so I haven't tried it yet.
Gotcha. The Tasty Trade crowd refers to it as a zebra trade, I believe.
Oh.
Always
fun with options, right, Sean?
Absolutely. I know exactly what
Sean goes about. Like on mute. So I'm like, I'm not going to talk on this one.
No, it's interesting. It's interesting. You still talk about levels and stuff. But
did you any thoughts on semiconductors, Sean? Because it's a controversial spot here.
I like them. No, I do. I don't trade them as often as I like to. I think because obviously there's lots of volatility in them, and I think that could be quite beneficial as a trader. So I've definitely I've actually taken a few notes while you guys were talking. But this SMH, I like the 20-moving average on the weekly. I like that a lot. I know there's a couple of topping candles there, but with the NVIDIA and their kind of guidance that they gave, I heard great things, of course. And I think we can challenge 500 again pretty soon because we had a nice little volume push, or not volume push, the candle push up on Friday, as you can see on the chart for NVIDIA, off the 2-moving averages as well. But the trend is your friend. It's still going up. It's still doing well, and the company is still posting wonderful, wonderful numbers and wonderful guidance. So there's no reason why you shouldn't be interested in this stock and the industry, like you say. So I'm going to have a look at this stock, and I'm looking for that kind of 500 level for a possible breakout trade. Would you believe?
Yes, I like it. Well, we'll keep our eyes on NVIDIA, no doubt about it. I did get hosed on Marvell last week. Their earnings did not do well, and they just continued to sell off where other chip names got some support. So I'll be reassessing the position in Marvell. That was
we have a question from John.
All right, let's see. Ooh, Forex market from John. So do we just do stocks or do we touch on the Forex market? I personally have not traded Forex. I know some friends who dabble, but how about you guys? Sean, you get into it, okay?
No.
I've tried it. Yeah, I've tried it. Yeah, it's more about supply and demand in my opinion. But in terms of getting the right time of day and having the right pairings, it just doesn't appeal to me in that sense. But with the stocks, it kind of does, obviously, because we've got news kind of related to that as well. I know you've got news related to Forex, but it just seems like, trading is a big world. It just seems like Forex is the same sort of thing, but like another big world to learn. But yeah, all the patterns are kind of the same. So you could probably do both.
I have been in commodities like gold, silver, but I end up coming back to stocks because that's
just more appealing, aren't they, I think?
Yeah, I think so. I mean, I do as well. I know some friends who trade Forex, so I like the question a lot, John, because it's super interesting markets. And you can trade them, all kinds of different hours, right? Like around the clock, if I'm not mistaken. And that's what they really liked about it. But they were glued to their screens. So they were always glued to their screens.
What about you, John? Do you trade Forex?
Let us know in the comments. Drop a note. I'd be curious.
Oh, he does. Lovely.
All right. Oh, he does. Yes. Nice. Well, that's good stuff. I always like to hear about, how traders trade other markets, futures traders. We all are using similar techniques and patterns, and it applies to different markets.
And then you have crypto folks as well, right? You got crypto folks as well trading.
You got it. No doubt about it. Actually, I didn't bring in Marathon Digital this week, but ticker MARA tied to the crypto world and at a key level right now, 1025 to 1075. I know this is a totally random offshoot, but at a really key support spot. We'll see if it takes off from here or not. And another comment from John, gold and oil. Yes, I've got another friend who is all in on gold right now, so you're not alone there.
And we cover all stocks too, right? We cover all stocks. We love in the energy sector.
We will get to oil. Yep, definitely will.
Is your friend Robert T. Kiyosaki by any chance?
That's awesome. All right, let's keep things moving along. DraftKings I got up next. I mentioned that this chart looked a lot like the Tesla chart, and I think it was a Tesla chart. Yeah. And we've got this big bounce off of 2534, which is really nice to see as a key support level that was prior resistance for a bit. Then we got the launch off of that level previously. There is a gap above as well that I think maybe we'll try to go fill and get back up to 30. So I'd really like to see it. I like the close above 28 last week, but that one moving average I left on the chart, the 50-day moving average, is right above where the candles are trying to trade last week, and they just kept rejecting. Even on Friday, pulled back off the 50-day. So it's got to get above that before you can really be serious about trying to get back to 30 and then looking for a potential set up for a breakout trade. I would say, Sean, if we get back up to those levels. What are your thoughts on this chart?
So I was on mute. I like it. I like kind of where it is now. It's still above the kind of 25, a nice little bounce, break through the trend line, like you mentioned. But from a breakout perspective, are you talking about the 31 level?
Yeah, you'd have to get all the way back up there first, right?
Yeah, you could also use potentially the moving average as a breakout as well if you're feeling so bold. To kind of combining with the 29, 25 level as well. That could kind of come up to 31, come back down to 29, and then breakout trade from there. I don't know if you follow with that one.
Okay, I like it.
But generally, it's not being under the 50. It's not great, of course, but I mean, you just never know, really. And you can see the MACD at the bottom there. It's not too bad either. Kind of curling up.
It's curling up, right? RSI is moving up, and we broke that downtrend and bounced off the support level. So, I kind of like the shift here, but we've got to see. I mean, volume's not really picked back up, right? It's still really, really weak here. So,
there's one thing about DraftKings. If you get one good volume day, it does tend to kind of follow on from that. And you can kind of see it throughout the chart. Just one of those stocks that does that, I guess.
I totally agree. You mentioned it with NEO before, that if they get a good pop on earnings, that you'll tend to see some follow through and you would look to stay in the trade. Exactly how I feel about DraftKings. So
it's normally as simple as it kind of pops up on people's screeners. So people do a lot of volume, like sorting their screener by volume and finding those stocks just by volume. And if NEO and DraftKings come into that, they think, oh, I'll look into this stock. And then if a particular set's right for them, then they'll kind of go for that, which only adds to the volume.
Yeah, right. No, that's a really good point. How about you, Kay?
No, I'm liking this setup because, I think your 25 is a very good support level. It bounced couple days ago, and then back then before the big ramp up, you had couple of bounces at that level. This is a good, trading range from all the way from 25 to 29. If it just trade ranges over there, you can, run weekly trades on it. And then if you get a big gap up, if you own stocks, then more the merrier. But if as long as the $25 is respected, which I think is a solid support line, it could be a very good place to get in. I have not looked at the option side, but generally, these stocks have a very good options premium as well.
It does. It's back at its normal levels. It was super elevated heading into its earnings, as you would expect. So again, got the IV crushed and sold off. I don't have it on this chart, but yeah, I think that you still get pretty nice premiums with DraftKings. So nice. Okay, we'll keep it rolling because I know we have energy coming up, and I think John will want to see that. But first, what do we have here? AMD.
First, we have AMD. Yes. So very interesting on AMD. I have a couple points here that I want to talk about. So going back in May, when AMD was around the $102 level, we had NVIDIA crush earnings, and that's when AI came onto this whole spur on the platform, and then we saw this massive run in June, and since we had that big AI rally. Looking at this chart right now, let me zoom in. We clearly are in a downtrend, right? It's making lower highs as we are going through. So I drew a trend line. And what is very interesting is that $102 is a very critical level for this stock. And on Friday, the stock closed 25 cents above. So there was a lot of buying pressure coming in to pull it above the $102 level. Why? Is because 102 is pre-NVIDIA rally from the last time. And 102 was a major resistance going back all the way to August 2022. And if it breaks, you can go all the way down to, I don't know, maybe 71. Because there isn't much support level, maybe at 84, 93, but those are all fib levels. Yeah, go ahead.
Yeah, I was going to say, I think about 85, you might get a little bit of support there. But yeah, I agree with you. Keep going.
Yeah, it's going to be a big drop, right? From 102 going into 85, that's a big drop. And psychologically, generally these whole numbers, like 100, 150, for stocks, those are psychological numbers. And once those break, sometimes it's a free fall from there onwards. The problem is, if you notice, NVIDIA had a blowout earnings, $13 billion. AMD has $5.36 billion. So it's not that far off. But, NVIDIA is a pure GPU play, right? They make GPUs, phenomenal GPUs. AMD makes CPUs and GPUs. They are, giving a run for the money to Intel in the CPU space. But their GPUs is not at par at NVIDIA. They are more low-cost GPUs. Stock price is both below 20-day and 50-day SMA, so that's also not a great sign. The trend line is going downwards. Our put-to-call ratio has gone up to 0.94, so it's getting to it's bullish, but it's getting to a point where people are. It could go above 1, and you will see from the numbers for next week, September 1. At 95, you have 6,900 put options. At 100, you have 8,300 put options. And at 102, you have 2,300 put options. So a lot of put options being open for next week. And so if I would like to play AMD, I would play on the safer side where I'm looking at maybe $95 to $97 in the option side if I want to open a cash secured put. But that's pretty much what I'm looking at.
Sean, you first on this one. I see a potential setup for upside trade, but what do you see, Sean?
So I actually see two things: a potential breakout trade, but to the downside, if we were to kind of that 102 level we've been talking about. If we come down, settle somewhere, then come back up and retest at 102, that's where I'd be entering for a short. For two reasons: we're below, obviously, like you say, the moving averages and that trend line as well. So that would be a good entry point for me. And on the other note of that, if you imagine, so you've got the orange line there already, that's coming down from the top there. But imagine a trend line coming up from the bottom, kind of lowest point of this chart, and add it through all the lows. You kind of obviously see like a triangle. And we're kind of breaking that as well at the same sort of time. If my eyes are correct, I could be completely wrong. We could be sitting at that level where we are now. But if that breaks as well as the 102 level, then yeah, I mean, we're talking pretty bearishly on AMD at the moment.
Sean, I'm going to add that line for next week.
Okay. But we're speaking generally quite bullish on, we said SMH and NVIDIA earlier, just generally quite bullish on the semiconductors. That's a tricky one.
It is.
It really is a tricky one because obviously news dependent as well. Nate, your thoughts?
Yeah, AMD did not act as nearly as well as other names in the space, I thought. And I don't like the selling here, but if you just, kind of step back and look at the chart, this pattern just keeps showing up, right? These like stair step patterns where it sells off nice and orderly and then finds support and moves higher. And it breaks that downtrend, the upper level. Like, so that dotted line you've drawn there, Kay, is effectively what I would be looking for an upside breakout trade. Is if we can clear above that, then maybe make another attempt to get back to 130. But not before. Otherwise, I'm with you guys, and we're trading to the downside, right? Like I wouldn't even attempt to get in for a long until I broke above that trend line. That's me personally. Yeah, and
I'm personally very bullish on AMD, along with semiconductor and NVIDIA. So if it presents, these are opportunities when you can add to your long-term portfolio, even if you don't want to trade, right? Because at this channel we talk about trade specifically, but you are also talking about stocks that you can add to your portfolio for long term. So these are opportunities you will get into, buying these high quality stocks.
So just to throw some numbers on this, I was just saying, throw numbers on what I was talking about with AMD. I think you have to get above 110 before I'd be interested. Right, 102 to 110 is a solid, 7-8% move, and I don't think that's ridiculous given how much it's pulled back, 30% or so. And shows it can really move. So if we drop from where it's at now to the 85% or 85 level, that's 15%, right? Like that's a significant move. So anyways, I like this chart. I'm glad you brought AMD forward, Kay. It's a super tricky spot here.
Yeah, it's that's on. And if no questions, let's move on to the next one.
All right, energy,
love it. ExxonMobil. What do I say about ExxonMobil? I have, this is the first time I'm bringing it up. I know Nate, you cover ExxonMobil a lot, not on the channel, but offline you cover ExxonMobil a lot. Sure. And I love ExxonMobil. Why? Because first, it's a great dividend stock, and it's a great candidate for wheel strategy. So anybody who doesn't know what wheel strategy is, you buy the stock using a cash secured put. Once you own the stock, you sell that stock as a covered call, and then you rinse and repeat the process. That's what wheel strategy is. And this is amazing stock, I would say, because it's a very range-bound stock. Now, if you notice how it forms the range, the first range I'm seeing is 104 and 107. That's when you had the first range. Once it had a breakout, now you're looking at a range of 107 and 109. Those are the next ranges that the stock is trading. Short term, we saw rejection at $111 twice. So it says 111.02. I'll just take 111, whole number. That's much easier. So right now, 111 is the short term resistance that I think is going to face. And a lot of times the prices are pretty much tied up with OPEC news and OPEC plus news. So if you are into the commodity sector, you probably are much more well versed with how the oil prices move. But this is what the range is currently for the stock. The stock price is above the 20-day SMA. It's above the 200-day SMA, so that's also a very positive sign. With SMA 50 SMA slowly catching up. I don't have those over here, but I have it on my notes here. And the put to call is also 0.87. And next week we have 2,900 call options on the $111, which is showing that it is your absolute resistance level, at least in the short term, and you only have 2,100 put option at 105. So those are a couple ranges that you can take into account and play a trade if you would want. I would be opening a trade as well on this one. I'm probably going to target between 106, 107, depending upon the premium that I get.
Nice. I like it. I wrote about energy in my newsletter this week. So if you're interested, check that out. I think we have links here for the newsletter. If not, my Twitter bio definitely does. Yeah, thanks, Sean. Check the link below. But I wrote about XLE, did some technical analysis there. Then also have some analysis and trade ideas for Schlumberger, SLB, Shell, which is ticker SHEL, and Cheniere, which is ticker LNG. So yeah, I like the energy space, and I like this chart, and I'm seeing potentially a cup and handle formation. So looking at patterns here, you've got the level nailed at 111, which I like because it's nice and easy to remember, Kay. But yeah, look, if we break, we've got the huge cup, going back to, I guess that's probably April, May timeframe. And now you've got the resistance hit at 111, forming the handle on the right-hand side. If it breaks above 111, I think we could be off to the races. So that's what I'd be looking for.
Sean, any thoughts from you on this one?
Yeah, it's a bit of a strange one. I quite like this as like a bit of a messy breakout setup around that kind of 107 line. So you can see all the resistance points that you mentioned kind of throughout the middle section of the chart there. And then we pushed up to that 111 level that we've been speaking about a few times, twice. But in that kind of momentum, we kind of came down and retested that 107-ish level, probably 106 more like, which is a bit more, it could be seen as a bit of a breakout trade. So if we get like a bit of a rough start tomorrow, potentially, a little bit of a sell-off after a nice Friday, stock comes down to kind of 107, 160, 106, that kind of level. I'd be looking to kind of enter there, keeping a nice tight stop loss, I reckon, and then kind of making a target price of take 2/3 of my position about 111. That's how I kind of go for kind of breakout trades, and it looks good to me. It looks a bit messy, like I say, and it's a bit more of a risky one, so I'll probably use slightly less percentage than I would normally do with my portfolio. But yeah, I like the setup.
Sean, I love it. I love every detail. That's good stuff.
We were speaking off air about dividend stocks, and I've been looking into them a bit more recently in terms of day trading. So I'm going to really kind of test that this week. Obviously, this is not the time to talk about that, but that's kind of what I'm looking at, and this is a great addition. So I've just written that down.
That's great. That's good stuff. What else, Kay? Anything else to add to ExxonMobil?
No, I just love this one of the stock. And I personally love stocks that are range bound, because you can just repeat the process of wheel strategy, generate income on a weekly, bi-weekly basis. When you have too many breakouts, it's not ideal for wheel strategy. You will tend to lose stocks, or you will end up getting stocks at a much higher price than you would have hoped for. So yeah.
Yeah, this is great. It looks like we got multiple trades opportunities coming out of here. All three of us see different potential for different trades. I love it. Thanks for bringing this one forward, Kay. And I think that's about it. So do want to remind everybody that you can get a hold of us a number of different ways. Find Sean and Kay and myself on Twitter. There's our handles there, and you can check the links below. Do subscribe to this channel here, The Trading Triangle, and please hit the like button if you enjoyed it. We're here every week, and we appreciate your support and want to get the word out to as many folks as possible. And we also wrap up here with some closing comments. But yeah, take a look at the newsletters we've got out here, the YouTube channels that both Kay and Sean are running, in addition to contributing to the Trading Triangle every week. Lots of good stuff on X. So with that, guys, let's wrap it up for the week. I would say that a lot of great information came through the markets last week, and we're set up nicely to, at different levels to make nice trades again this week with a lot of information behind it. I feel good. I don't know. I feel good going into the week. So I'd last time I said that, I think we got smoked. So take that for what it's worth. But that being said, what about you, Sean? How are you feeling?
Yeah, I feel really well prepared. I've got lots of notes from this week, more than normal, which is really exciting, really good to kind of set those price alerts and kind of go from there. But generally, from a news point of view, obviously we've got NEO earnings for me personally, but we've got PCE on Thursday, so that's one to watch 1 hour before market open. So just be careful if you're holding trades overnight on Wednesday. So it's very easy to get burnt if you just forget about news. But that's it for me, really. Just kind of trade safe, set your stop losses, set your target profits, and just stay disciplined when you trade.
How about you, Kay? No discipline there? Or are you staying disciplined?
No, I will be disciplined. I will I stick with the stocks I talked about. AMD, you got ExxonMobil. I have Square from the last week. Those the names that you trade on a regular basis, keep an eye on the news, what's going on, as you guys mentioned, and just stay disciplined and take every week as a new week. Whether you won last week or lost last week doesn't matter. It's a new week. You'll start from a new board or a blank slate.
Yeah, keep those emotions in check.
Okay, I think we're losing you. But you're kind of disappearing a little bit.
Yes, I'm losing.
Case fading. We got to end the broadcast. Have a great week trading, everybody. We'll keep an eye on Kay, make sure he's good. And
I don't disappear. Yes.
Yeah, thanks again for tuning in to the Trading Triangle. See you guys.
Take care. Bye-bye.